Hello, everyone, and welcome back to the Accounting Podcast. I'm Blake Oliver.
And I'm David Leary.
And this is your weekly news roundup of everything you need to know in the accounting profession. This week, we are talking about undergraduate accounting enrollment up 12%. The IRS is delaying its buyout offer, the buyout offer from the Trump administration, until after tax season. What else do we got, David?
Adobe surveyed 1,000 Americans about taxes, then provided really lame tips that I think some of these tips I think accountants will roll their eyes at because I don't think it's going to make your work any easier.
We've also got Illinois discussing a alternative to the 150-hour rule. That's I think that's forthcoming legislation. Is that right, David? And I've also got a lawsuit related to BDO's ESOP, their employee stock ownership plan. They've been hit by a class action lawsuit.
We also have Musk claims that he's deleted the team that worked on IRS direct file and how no tax on tips might backfire on Trump. So I found an interesting article about that.
All right, we'll try to hit all of that in the time we've got this week. Before we do, though, let's thank our sponsors.
So our sponsors this week, we have Onpay, Keeper, and Cloud Accountant Staffing.
Thank you to Onpay, Keeper, and Cloud Accountant Staffing. Stay tuned for information about those products. And to support our show, please do use the promotional links that we will provide to you later. And welcome to our live stream viewers. Hello, Boring Accountant. Just 2 coffees today, 2 coffee emojis, not the usual 3 or 4 or 5. It's a Monday, so I think maybe there should be more. Hey, Evan, how are you doing? I got to say, before we get into the news, David, don't get the flu. I got the flu last week, and I am still recovering. And it's been like, it's been a while now. It is bad.
It's been brutal this year. We had another employee who she got the flu maybe 3 weeks before you, in a completely different state. So it wasn't like earmarks the massive spreader of these. We're states and states away, but it was really bad for her. So my understanding is the flu is really bad this year.
And my wife sent me a story saying that the reporting that the CDC says that U.S. flu cases have reached a 28-year high. About 13,000 people, including 57 children, have died from the flu this season, and they expect that to possibly double. It's bad. So yeah, I'm still like tired. I'm sleeping a lot, but I was in bed for like 72 hours straight. I could not do anything.
Oh boy.
Yeah. All right, David, shall we start? Where do we want to start?
You want to start DOGE? You want to start the employee offer?
Let's talk about the direct, well, we've got direct file and we got the buyout offer. So yeah, let's talk about this buyout offer. So,
to recap,
yes.
Last episode we talked about there was a letter sent out to federal employees, and the subject line was a fork in the road, if I remember correctly, and they had until February 6th to accept the offer to. Basically, it's like a, lack of better words, an early retirement, right? Like we're going to pay you this money to leave your job.
Yeah, severance payment.
Severance payment.
Right? You get, and you're not going to have to work and you're going to get paid through September, something like that. So it's like 7-8 months of pay, and you're not going to be required to come into the office. And that offer went out to IRS employees, and that has now been modified. The IRS employees who accepted the Trump administration's buyout offer are being instructed to continue working until May 15th. And of course, the original terms where you were just going to be able to stop working immediately. And that is, of course, to make sure that the IRS is properly staffed through end of tax season. Doreen Greenwald, the president of the National Treasury Employees Union, which represents IRS employees, condemned the move as a, quote, bait and switch, stating that employees were initially told they would be paid not to work through September 30th. Roles in taxpayer services, information technology, and the taxpayer advocate service are being deemed essential for the tax filing season. So the employees in those groups will not be able to stop working if they took this buyout until after May 15th. IRS is still under a hiring freeze. And There's actually a judge that is reviewing this entire plan right now as we speak, this today, and will determine whether or not it can proceed.
Because I think there was a temporary hold on the February 6th by midnight accept date. And that's still open, I think. My understanding, it's just temporarily on hold. I do know that I saw that there was an email the National Treasury Employees Union sent out, which that's the union that represents IRS workers, has urged its members not to take the offer to resign. So people are, but obviously I get it. Like, I don't want to do another busy season of tax. I want to resign and take the money. I get it. I could see how it's appealing.
So that judge that I mentioned is Boston Federal Judge George O'Toole, and he is weighing arguments about whether to block the program permanently. One of the arguments against this is that Congress has only appropriated funds through March, and so the administration can't make any promises beyond March as to whether or not employees will continue to get paid. Although I find that a bit interesting because we are assuming that the employees will continue to be employed, even though funding has not been appropriated by Congress either. So I don't know. Did we talk about the numbers that have accepted? When we originally reported on this, we said that the administration thought 5 to 10% of federal workers would take this buyout. And so far, they say that 65,000 employees, which is about 3% of eligible workers, have accepted resignation packages so far. So they got 3% out of the 5 to 10% that they were hoping for. But maybe they'll get more because they did extend the deadline until midnight today, as we record this on Monday, February 10th. Workers can accept this offer as well because of that temporary injunction that happened last week. So we'll see what happens.
In general, my understanding is if you can get a government job, it's a pretty good job. And you do that until you retire, it's a good thing. I imagine the people taking this are probably people about to head out the door anyways or have some other opportunity. Right? Like if this is your job and you're a career, I'm going to use the word service person, right? You're serving your country in an indirect, direct way, I guess. Like if this is what you want to do, I don't see you taking this offer. So 3% makes sense. And then actually that's the next question. So does it matter if 3% leave? Does it even make a dent on anything?
Well, it's billions and billions of dollars of salaries.
That's true.
And if it's people that don't want to be there, maybe we'll be better off as taxpayers as a result. I want to say welcome, Natalie Lennon from Australia. She says good morning in the chat. Great to see you, Natalie. And David, I think it's time to thank our first sponsor, Onpay.
Okay, let me click around here. So Forbes and CNBC rank Onpay #1 for small business payroll. Onpay really knows how to get payroll done right for every client you serve, no matter how complex. Their software is easy to use and backed by outstanding service levels. They handle new client onboarding for free and have experts on call to keep you and your clients on track. The system includes multi-state payroll, local tax filings, integrated HR tools, and more with no hidden fees. And when you join Onpay's partner program, you get a custom dashboard to easily manage all your clients in one place, plus gain exclusive perks like revenue sharing or discounts, free payroll for your firm, co-branding opportunities, premium swag, and more. Onpay helps you run your practice efficiently while providing exceptional payroll that your clients can count on. To learn more about using Onpay for your firm and clients that may be farms, startups, restaurants, bars, doctors, nonprofits, gyms, franchises, or dentists, head to accountingpodcast.promo/Onpay. That is accountingpodcast.promo/ONPAY.
Thank you, Onpay. Now let's talk about some good news in the profession. Undergraduate enrollment in accounting actually grew in 2024. It increased by 12% in fall of 2024 compared to 2023, reaching a total of 257,278 students. So over 250,000 accounting students in undergrad. And this is the highest since the fall of 2020. And it's approaching the pre-pandemic enrollment of fall 2019, when there were 257,000 students, round that up to 276,000 was the high in 2019. Four-year colleges experienced the most significant year-over-year increase with a 14% rise. They added 23,000 students. Now, graduate level accounting enrollment actually decreased by 2.8% from the previous year. So what's up with this accounting increase? Why are more Gen Z, why are some more young people enrolling in accounting? I think it's got something to do with these changes to the 150-hour rule that we're seeing roll through states. Students are realizing that accounting is going to have a better ROI because they don't have to go get that master's degree in order to sit for the CPA exam. That's my theory anyway, and I'm open to hearing more. If you're listening and you have a reason, a theory for why accounting is increasing, let us know in the chat there.
I mean, sometimes I feel like we're in a siloed speaking to ourselves in a mirror in a chamber, right? Because like all these stories about AI is going to kill all accounting jobs, because of stories and fear stories like that, you would assume the number would be going down even more now. But obviously, people are confident. Hey, if I get an accounting degree, I can get employed, right? And you're right. They're probably weighing the ROI on it. If you don't have that extra year of school, hence why that's the real stat there. You said undergrads are up, but the masters are down, which would tie it back to the.
That would make sense, right?
Yeah, makes sense.
Yeah, fewer people going to get the master's because they know that in a short amount of time, like in Ohio, they're going to be able to next year sit for the exam without having to get those extra 30 semester hour of credits.
Yeah, just go work and get your 2 years of experience and make some money, and don't go to get the grad.
Yeah, and this actually fits with the study that MIT Sloan did, which found something like, I think it was 15%. It might have been 14%. They found a 14% decline in the total number of CPAs after the 150-hour rule came into place. So if we start to unwind that, we should expect to see an increase, a corresponding increase of around that amount, which 12% fits. So look, small changes like eliminating that extra education have a significant, meaningful impact. Is it enough? Maybe we can do more. I'm sure that there's plenty more that we can do, but this is a great first start.
Yeah. And the latest state to propose an alternative path now is Illinois. I don't know if you saw it. They proposed a bill. A pair of Illinois representatives who are both CPAs, coincidentally. They proposed House Bill 2459 to create 2 additional pathways to CPA licensure in Illinois. So previously, you had to hit the 150 hours, and this Illinois CPA State Society believes this will no longer support the profession's current and future workforce. So the 2 new pathways, so you have one way, which is a bachelor degree with 120 credit hours, including a concentration with accounting, and 2 years of relevant work experience, and then obviously passing the CPA exam. Or the alternative is obtaining a master's degree with a bachelor's with a concentration in accounting and completing at least 1 year of relevant work experience and passing the exam. So one path is very similar to the existing path, but then you get to have this, just get a bachelor's degree, hit your 120 hours with an accounting concentration, and work, take the exam. So what I thought was interesting, the Illinois CPA president, CEO Jeffrey Brown, in his statement made a comment, similar new pathways to licensure are also being explored and pursued legislatively in many of our neighboring states, including Michigan, Missouri, and Wisconsin. I find it interesting that he's calling out what the other states are doing. It kind of tells me that maybe they're working together on how they march forward on this. And there's no mentions in this article at all about the AICPA. None. It's like they're not part of the game. Like this was going to happen with or without them, and it feels like it's happening without them now.
I agree. All right, let's talk about direct file. So last week, we saw a tweet, a very strange tweet from Elon Musk, which is now on the screen here. The tweet is simply, "This group has been deleted," and it's a retweet of a screenshot about the IRS direct file system. So what is happening here? Has the direct file system been deleted? Is it not happening? This, by the way, is the system that allows taxpayers to file their taxes directly with the IRS, to not need to use something like TurboTax. It has proven very popular. It has saved taxpayers millions of dollars. And it was created by a group called 18F, which is a digital agency inside of the government. And they work with other agencies to create software, such as Direct File. They worked with the IRS to create Direct File. So, like, what is going on? What? It turns out, though, the group's still operating. Like, I don't understand what
Direct
Elon
File
was
still
tweeting
exists.
about.
I'm displaying the Direct File website on the screen as we speak. It still exists. It's running. What was interesting about this, though, I went down the funnel, right? The click funnel is about 18F. So I'll read the about screen for 18F because I never heard of it until this tweet. Basically, I don't know if do you know this existed?
No, I'd never heard about this.
So about 18F, we help other government agencies build, buy, and share technology products. 18F is a team of designers, software engineers, strategists, and product managers within the General Services Administration. We collaborate with other agencies to fix technical problems, build products, and improve public service through technology. And the name is basically short for the address of the GSA headquarters, which is 1800 F Street. So it's like a skunkworks type group inside the bigger General Services Administration. We used to have at Intuit something like this. It was called Intuit Labs, and you would use them to build kind of experimental things when you didn't have the resources to do it. And other companies, this is not something new. A lot of tech companies did this. Yahoo had some sort of garage like this that they had all these skunkwork projects going on at Yahoo early in the days that became all these separate startups, et cetera. So this is what's interesting about this is you would think DOGE would like to have an operation like this.
Right.
Because they could help improve. They're basically sharing knowledge. It's almost like a bunch of really good mercenaries that are really good at rolling out tech to government agencies, right? And you would think this should be right up DOGE's alley, and obviously they're not. And some of it, if you go back to that tweet, if I bring this back up, so this got shared by somebody accusing 18F as a far-left government-wide computer office, which I thought is a little bit of a reach on that.
Yeah, I don't get it. So it's not really clear from Elon's tweet what exactly is happening. What we do know is that 18F's Twitter account has been removed. So there apparently, if Elon decides you shouldn't be on Twitter, you get deleted from Twitter.
So
but
that's
like,
what
yeah.
it is. They got deleted from Twitter.
Yeah.
Okay.
It's strange, but like you would think that a group like 18F, which is designed to make the government more accessible, to make tax filing easier, to do all this stuff, would continue to operate, that it would meet the mission. So I don't know what's up with that.
And from what I can tell, they don't get direct government funding. So it's an operation that exists. And so when they do work for the IRS or different government agencies,
they get funded by them.
Intertransfer budgeting stuff that goes on. Yeah.
Yeah. So, you want to talk about DOGE now and their access to treasury systems? I've been hearing all about this, 19, 20, 22-year-old tech guys getting hired, I guess, as treasury employees so that they can then get access to the treasury payment system. And people are freaking out about this. But my first reaction is actually, this is brilliant. If you want to figure out where the money in our government is going, what's the best way to do that? It's actually not to look at the budgets. It's simply to go over to the treasury and get access to the payment systems. This is what I would do if I was an auditor and I wanted to see where is the money flowing inside a business. Get access to disbursements, get access to see the payments going out the door, and then figure out what you can cut. And that's what DOGE has done.
And so a lot of this was, there's another tweet from Musk again. I'll bring that up on the screen. He claims that they work together with the Treasury on this, and they jointly agree. But he called out, some bullets of issues he has with this. So apparently there's already an existing do not pay list of entities that maybe it's half being implemented, half being ignored. So in this list is people that are either they don't exist anymore, they're not even alive, or they're bad actors. And so he starts with that, like they need to, which I agree with, right? If there's a list of people we're not supposed to be paying, stop paying those people. So he found that. And then he said that over $100 billion a year of entitlement payments are to individuals without a social security number or even a temporary ID number. So if that's happening, he's saying that's very suspicious. Also, just this is a simple bookkeeping thing. A lot of payments are going out with the comment field just being blank. So nobody knows really what the funds are for. It's just laziness, right? That's just going out the door. He did say in this tweet that they had a rough, so he was trying to ask if anybody at the Treasury had a rough guess of what percentage of that number is obvious fraud. And the consensus in the room, it's about $50 billion a year. There's just obvious fraud going out of the payment system. So
Wow.
there's, if they can just get tighter bookkeeping, right, processes and approval processes, that would be a big deal. But it's the chaos method of going after this maybe isn't the best route. Right. This is a lot of chaos happening, and it's so hard. It's confusing what's going on. And then because of the chaos, people don't even see his points. Like these are kind of okay points to be making, but nobody's going to ever see it because of the others. I'm going to put a 19-year-old in and this other person in, and it's just he could probably go to that. It's 18F. He could probably go to 18F and say, "Hey, can you use AI to go and pull all these transactions and categorize them?" Maybe
Right.
that would be a better use of that other
I don't know.
division.
I mean, it seems to be working politically. If a great example is all the fuss about these, what was it? Government employees with $36,000 a year subscriptions to Politico that are getting paid through their budget. Apparently, Politico has some sort of like enterprise subscription, and it's tens of thousands of dollars per seat per year. And so they're receiving millions and millions of dollars from government agencies. And it's all about, it's like access to detailed information about policy and policy proposals and legislation and that sort of thing. But it's through Politico, a news site with a like political bent, right? That like is perceived as being left leaning. And so it doesn't look good, regardless of what those subscriptions are for. And it makes the news. And people say, wow, look at all this government waste. Good job, DOGE. So it was kind of brilliant to get access to those systems and to look for that kind of spending.
Yeah.
And as Gator says, Politico Pro is like LexisNexis or a Bloomberg terminal. It is not a political thing. Right. But people don't understand the subtlety of this. They see Politico, the magazine, Politico, the website, the news site, and then, they see payments going to Politico. And so that gets people riled up.
It's a soundbite.
But also, like, I see the point. If government agencies are giving millions of dollars to Politico, could that possibly influence the reporting? Right? Like, money is flowing. Follow the money is what we always hear. So, it's fascinating. This is it. Yeah. Go for it, David.
I was going to say, it's not like Politico is the NPR where our legislature has carved out money for them, right? But I get it. These are like these Bloomberg-style terminals. I don't know. I have to 100% agree, though. It gets the headlines and it gets people riled up the way they want to be riled up.
Madman Dan says the issue is more complex than a 19-year-old or a young'un can understand. I assume that's what you mean there, Madman. It's the conflict of interest and questionable background of the people he is using.
That's the one thing I wonder about is we already have this problem in our country where social media knows too much about us and big tech, and they're gathering just tons of data about us. And on the other hand, now I want access to the government's payment system. It does feel like, I don't know if I want this guy that has all this other data about me also seeing this data about me.
Well, it's not like Elon himself. Elon himself doesn't have access to this information, right? It's employees, or I don't even know. So I guess they're affiliated with DOGE, which is not an actual department of the government. It's a committee that the Trump administration has put together that Elon is running. And then those employees, I guess, become not employees. those members then become employees of the Treasury Department so they can get through their security clearance and get access to this information. But it's not Elon himself.
Yeah.
So theoretically, he should not have any of this individual information. Right. But apparently, I guess there's reports of like these guys loading the information onto thumb drives. So we'll see. We'll see what happens with that. David, let's thank our second sponsor of this episode, Keeper.
Our second sponsor is Keeper. Did you want to read the ad?
I'll read it. By combining client communications, file review, reporting, and task management, Keeper has everything you need to run your bookkeeping or CAS practice. Keeper is an all-in-one app that allows you, your team, and your clients to easily collaborate to make your monthly close as efficient as possible. Starting with a beautiful custom-branded client portal optimized for bookkeeping work, your client can answer questions you have about uncategorized transactions, allowing you to categorize and automatically post them to QuickBooks Online correctly, all without ever leaving Keeper. Keeper's month-end file review feature will surface transactions that may not be posted correctly, and with Keeper's customized reports, you'll be able to increase the value that your firm provides clients by giving them reports they'll actually read. Keeper's built-in task management ensures nothing falls through the cracks, and it includes time tracking so you can see where you and your team spend their time. Keeper has a very affordable and clear pricing model that starts at only $8 a month. To learn more about why thousands of bookkeepers and accountants trust Keeper to manage their month-end close and to get 20% off your first 3 months, head over to accountingpodcast.promo/Keeper. That's accountingpodcast.promo/KEEPER.
Maybe DOGE could get Keeper and send out all those uncategorized transactions and get justifications back into the accounting system. Just a thought. If Keeper's looking for a big sale, DOGE is out there.
All right, David, I want to talk about AI and automation and this concept of agentic AI.
Before we spin off on AI, can I talk one more politics story, if you want to call it that?
Okay, go for it. Go for it.
So no tax on tips may backfire on Trump. So I read an opinion piece. This is from a senior policy analyst at the Tax Foundation. And he has this data in here about how, it's not even defined yet what this tips are, right? Is it going to be
so this was the promise during the campaign to exempt tips from federal tax.
Correct. And does that mean income tax and payroll taxes, both? Does it only mean income taxes? It's not really clear. Is it just leisure and hospitality businesses? Right. And the Tax Foundation put some numbers around this. So if it's just income and payroll taxes, it's about $118 billion. If it's just leisure and hospitality, it could be $62 billion. But for perspective, the Tax Cut and Jobs Act was $3.6 trillion to $4.3 trillion. So in a way, like the impact of no taxes on tips is a lot smaller than these other things. And we've talked about in previous episodes, like, well, why don't you put all your income as tips? The good news is tips have a clear definition for tax purposes. The payments must be made free of compulsion, and the customer determines the amount. It cannot be the result of a negotiation. Those restrictions make it illegal to misclassify ordinary wage and salary income as tips. So to some extent, I think we're protected from people playing the game if no taxes on tips goes through. But the interesting argument in this piece was about the backfire. So would you agree that one of Trump's main goals is to increase U.S. manufacturing and manufacturing jobs?
Yeah, definitely.
So who is going to take a U.S. manufacturing job and get their wages taxed if you could work a hospitality business and avoid taxes?
Right. I guess that's a fair point.
And my 2 cents, if truly that's the goal, if you want to get more U.S. manufacturing, give the factories a tax cut and then create a policy of not taxing factory workers. If you really want to move the needle in the direction you're going, and at the end of the day, this is like, I'm not sure Trump knows what his goals are. He says something out of his mouth here, but his goal is manufacturing over here. The only goal I think he ever successfully focuses and executes on is to win the election. He's really good at that, right? But it's all over the board. Like, this could backfire on him because who's going to leave these jobs? If you get used to not paying taxes, it's going to be very hard for an incentive to leave that job. Because even if you're going to make way more wages minus the taxes, you're still coming out ahead. Psychologically, that's a hard thing to jump to.
Yeah. Well, tell you what, if this passes, if we do see tax exempt tips, then I'm gonna I think we'll see a lot more professional services firms accepting tips. I'll take half of my invoice as a tip, please. Thank you very much. Yes, it's optional, right?
When you go to your return, yeah, and I'm just going to ask you another question. We know it's going to be the tip question, but you just send that over and just charge
right.
less for your return, and then
wink,
ask
wink
for a tip.
Yeah. All right, David. May I talk about AI now? So
yes.
Thank you. So I spotted this clip on Instagram from this account. I think it's Grenate, GRENATE.co on Instagram. And I love this story about what happens when you try to automate something and you don't really understand the full scope of what you are automating. So I'm going to play this clip.
I've seen this guy before. Do you know his background?
I don't.
Is he just a consultant, a talker? All right.
Yeah. It's like anyway, just bear with me. Here we go.
Is okay, you take a hotel doorman, you go, his function is opening the door, therefore we'll replace him with an automatic door mechanism and we'll save £30,000 a year. What you're not realizing there is that in terms of meaning as distinct from function, the doorman has a whole load of meaning about him, which goes far beyond the narrow function of opening the door. He doesn't only open the door, he also hails taxis, liaises with representatives from local organized crime, talks to doormen at other hotels, provides a measure of security, okay? So you get rid of the doorman, you save £20,000, and what you discover is that 6 months later, the hotel, the rack rate's in free fall, there are vagrants asleep in the doorway, and the whole place has gone to shit. And your regular customers don't want to stay there anymore because they miss Dave, right? And I think that happens all over the place, where you bring in a reductionist mindset from tech or from finance. They define something complicated in a very narrow functionalist way. They replace the function with something else, and then they declare the job done and lay claim to the cost saving. But what you do is, okay, you take a hotel door.
So I love this because this, to me, is the same thinking. The idea that you can replace a hotel doorman with an automatic door opener is the same type of thinking that we see from private equity, venture capital, saying you can replace the bookkeeper or the accountant with an AI agent, because they're reducing what the accountant or the bookkeeper does to one function. In the case of the bookkeeper, it might be coding transactions into the general ledger, or a small set of functions that includes coding transactions, but also paying bills. They've reduced what that person does to specific tasks. But there's a lot that you miss. There's a lot of detail, a lot of things that that person does that you don't think of as tasks and that can't easily be automated. And so people are going to be really disappointed if they try to do that, right? And that's why I'm very skeptical of any startup that says we are going to build AI agents that do all your bookkeeping for you, because you need a human in that loop in order to handle all the other stuff that happens. It's like the doorman at the hotel.
And we'll probably find this out about some of our cuts that are happening in government too. There's probably jobs that people are doing or tools being used that maybe aren't communicated.
I don't think so.
And we're going to cut it. You don't think so?
I don't think so at all. I think that there is absolutely a ton of waste, and that you could, you look at what Elon did with Twitter, right?
Yeah.
Now, he comes in, he cuts like 80% of the workforce. The app still works.
Yeah.
Twitter keeps functioning. Now, its enterprise value may have plummeted because advertisers don't want to advertise on it, because, it's turned down into like a free speech platform, and advertisers generally don't like too much free speech because the speech ends up being, distasteful to them. They don't want to be associated with all of it. But that doesn't mean that what Elon did didn't work. He did slash the costs by like 80%.
And maybe it's easier for me to see that with a corporation like Twitter, because I worked in a corporation most of my life, and I saw just the wasteful people that
Yeah.
work in a corporation, making PowerPoint slides, et cetera.
How many people at Intuit, David, when you were there, like, did nothing
I
or a
always
net
felt,
zero
I always
for the
felt
company?
so. QuickBooks Desktop. Every year you'd have a date and time, and it has to be done because there's only so much manufacturing time to put it into the CDs and get it stamped. Like, it's a physical good, really. QuickBooks Desktop was, and I always felt like when push came to shove, those last like 72 hours when you're trying to like get the last bugs fixed and checked in, there was like 15 people at Intuit getting that product out the door, out of a teams of hundreds, because a lot of people just. Their job was to build the PowerPoints. Their job was to do this. They didn't either have that, like the doorman has all this extra knowledge, right? You have to be part of that. But I have not worked at government. I've only experienced it on the other side, right? You go to the DMV, you're like, geez, there's a lot of waste here. But yeah, so it's hard to know for sure because I just haven't been that involved working for a government agency about how inefficient or the amount of waste. But I imagine it's got to be there the way a corporation is.
Oh, yeah, even more, right? I mean, big corporation, government department, probably very similar. People hide, but it's even easier to hide inside the government because you have all these unions that protect you. It's really hard to get fired. So you can contribute very little and just continue to exist. And so, like, I really love this idea of cost cutting, of getting out the waste, of gutting the government of the waste that we don't need to be paying for as taxpayers. And I just can't understand why this is controversial. Why is this? Why are people opposed to this?
Well,
right?
Everybody has the one government agency they interact with or care about. We kind of care about the IRS funding. If you listen to our previous episodes, we care that the IRS is not underfunded. We care that the IRS provides good service to all our accountants and tax professional friends. So every agency probably has a customer base that cares about that agency. So when these things get cut, it gets very scary, right? You're afraid you're going to lose services.
Right.
Like if the IRS we've already seen the impact of IRS cuts over 15 years. Now you're going to go and do that to a bunch of agencies in a 2-week period. It's going to impact those agencies. There's no way around it.
But not every agency is directly dealing with taxpayers or citizens, right? There's I feel like the IRS is a case where, yes, the budget's been cut year over year for 15 years, but also they haven't done anything to modernize their systems in like 30 years.
Yeah.
So, like, what is the answer? Is the answer more funding, or is the answer getting rid of the people that just stand in the way of progress?
I forgot who it was on the All In podcast. They're talking about an extinction event. Right? This is going to create an extinction event, and whoever survives are the ones that are meant to be. Those are the government agencies will still keep, which is interesting way to think about this.
So I started talking about AI there, and I want to highlight another article that I read recently on Accounting Today. And this one, the headline is Agentic AI, Small Steps, Big Aspirations at Accounting Firms. And it's kind of a roundup of different AI initiatives at a few different firms. And I wanted to just like kind of go through these examples because while there's not like a ton of detail, I find it is helpful to think about where this is going. So EY is using AI agents. They call them mini agents that identify errors in tax data and propose corrections for human review. The system processes high volume data. So, for example, multinational VAT compliance across 20 countries. And they can feed this AI agent all this information and then try to find errors in the data. Another test they're doing is autonomous agents that can track jurisdictional regulatory changes, flag updates, and suggest stakeholder engagements. So I am really bullish on this. Setting up AI agents that will search the web, monitor changes in laws or statute or what's going on anywhere in the world, and then highlight that for humans to then flag for certain clients. If you think about how much, how many people are employed that just have to like stay on top of regulatory change and then update the team when it comes to tax or it comes to audit whatever it might be. That's a lot. Whipfly is doing something similar like that. They've got a researcher agent, and then they've got a curator agent. So the researcher agent monitors for regulatory changes, and the curator agent then distills the insights for their mid-market clients. So I assume writes about those regulatory changes so they can send them out to the clients. Armanino is using AI agents to automatically categorize and route client-provided audit documents to appropriate audit tasks. So you take in a bunch of documents from a client, let's use AI to name them, to assign them to different tasks for review. I think that's a great use case. They are exploring using AI for substantive testing to analyze audit evidence directly, although they have not done it yet. It's theoretical still. And then a firm called Shellman is using agents that can map client IT infrastructure pre-audit for cybersecurity discovery and help to streamline on-site reviews. So, take documentation about IT infrastructure and then map that to audit tasks.
Is there anything in this article that, are they building these in-house? Are these off-the-shelf third-party tools they're getting?
That I do not know.
We don't know.
I mean, it could be as simple as like just creating like a custom GPT that has training on this sort of thing, right? But I mean, you can build these AI agents now yourself. So these are larger firms, right? So I assume that they are building tools internally that then access, OpenAI or Claude or, perhaps some model that they're hosting themselves to do this kind of work.
This would explain why I have a story on a company called WiseLayer. They raised $7.2 million to build AI and finance professionals. I'm going to share my screen here so you can see how this is happening. Hopefully you can see this.
I do.
So they've basically broken it down to very specific tasks with very creative names. So you got reconciliations by Rick. You can do lease accounting by Lisa. You could do prepaids by Preston. So there's these bots. Now they've given them physical video chatbot type appearances. The funny thing is Lisa from accounting, Lisa, the lease accounting, I recognize her from somewhere. I don't know why. She must be another AI person.
So it's like they've used like stock photography to create these corporate looking AI agents.
Yeah. And I can't tell if you're right. It's got to be stock photography. And I don't know if this is just the marketing page or if this is the actual product, because all you can do is book a meeting. But it's very clear they're breaking down the functions of an accounting job into one little agent. Accruals and rev rec, reconciliations, fixed assets, lease accounting, prepaids, discrepancies. And this aligns with a lot of the examples you just gave. These very specific agent jobs that are happening. This happens to be a company doing it, but they raised $7.2 million to do this. They say they have over 100 companies currently using WiseLayer's AI workers, including mid-sized firms and public companies, and they have over 300 integrations into every major ERP, billing, P2P, HRIS, and more systems. We'll see. They have all the perfect quotes though. Like they expect to be like at 89% accuracy very soon. Or sorry, was it 98? Sorry, I might be transposing a number here.
Whatever it is, I'm sure it will blow our minds someday, David.
So Angela, who is the accruals and rev rec, she that bot automates about 90% of a company's accrual process with their novel and secure AI. They'll get to about 98% this year. So they're pretty confident.
So I don't know what to make of. I don't know what to make of numbers like that. Like, what does that even mean? 98% of accruals? Like, okay, if I have, like, what does that mean?
I don't. In general, historically speaking, in tech, the last 10% is harder than all the other percentages. Like every time you move up 1 more percent, it was harder than the previous 90%. And then 92% is harder than the previous 91%. So to make that kind of jump does feel like a little bit of an aggressive statement, but you're going to make that when you just took the money to do it, right?
All right, David, I think it's time to thank our last sponsor of this episode, Cloud Accountant Staffing.
I can read that if you bring up the banner. Or actually, I have the banner open. You got it?
I got the banner. Go for it.
In case you've missed the last 100 or so episodes, Blake and I have been discussing almost weekly that there's an accountant's labor shortage. Regardless of the root cause, the problem is real. My social media feeds are full of firms attempting to fill open positions on their teams. But how can anyone increase their staff size if everyone is attempting to hire during a labor shortage? That is where cloud accounting staffing comes in. They will help you hire full-time team members for your firm that reside in the Philippines. How much would your firm change, or for that matter, your life, if you could add 40, 80, 120 hours of capacity to your firm in 2025? Cloud Accounting Staffing was founded by a firm owner who grew his firm by using offshore talent, and now he's applying everything he has learned to help you grow your firm. If your firm is in need of expert bookkeepers, accountants, CPAs, or virtual assistants, head over to accountingpodcast.promo/CAS. That is accountingpodcast.promo/CAS. Thank you, Cloud Accounting Staffing.
All right, let's talk about the BDO lawsuit. BDO USA has been hit by a class action lawsuit alleging that the company's executives inflated revenues and valuations before selling a significant portion of stock to the employee stock ownership plan. I interviewed Wayne Burson, the CEO of BDO, on the Earmark podcast. Go check out that episode if you want to hear about that initiative. Basically, instead of going the private equity route, BDO went the ESOP route. So private equity is you take money from an outside investment firm to buy out your partners. ESOP is different. You borrow money and you sell equity to the employee stock ownership plan, which then gives that to employees on an annual basis.
So they're being accused of pumping up the numbers, overinflating them, and then selling to the employees, which is that's
Executives allegedly overstated company revenues to inflate the valuation, leading the ESOP to purchase 42% of BDO stock for $1.3 billion, a price above fair market value, according to the lawsuit. The transaction was reportedly structured to benefit BDO executives who influenced the valuation process and appointed trustees favorable to their own interests. Despite the ESOP's significant stock purchase, BDO executives retained control over the company's governance and voting power, leaving ESOP participants without meaningful influence. The ESOP was financed through a high-interest loan facilitated by BDO, resulting in significant financial strain on both the company and the ESOP. The lawsuit alleges violations of the Employee Retirement Income Security Act, including breaches of fiduciary duty, prohibited transactions, and imprudent investment decisions.
That's really disappointing because we had that interview when he came on the show, and at that time, our point of view was like, "Wow, you did right by the employees on this." And
well,
obviously, they did not.
Well, this is all again allegations.
And
this is part of a lawsuit. We'll see what happens with it. Is this, really the case? Is it not? A judge, a jury will decide. And that's all I got on this. I want to thank Adrienne Gonzalez at Going Concern for her coverage of this as it continues. So yeah, I think the thing that is the fishiest about this for me is the fact that the executives still retain a full control. So it's like the ESOP has purchased all of this equity, but it doesn't get control.
They don't get a vote on the table proportional to what they have. Yeah.
Right. So, what is the value of that ownership stake if you don't have control, if you don't have influence? Would a private equity firm have done a deal like this? If you treat this as an arm's length type of transaction, would someone independent have done it? Or was this structured in a way that really benefited the executives and the partners getting the buyout?
And ESOP's private. It's not like if I work for a big corporation that's a public company and I'm getting employee stock purchase plan, I'm able to buy that, or I'm getting employee stock options. It's based on value that the street's valuing those options at. And there's somebody looking out for you, but you're right. Are the employees not being looked out for in these ESOPs? We'll
see. David, I know we've got more to talk about, including that Adobe survey, but that will have to wait until next week. or actually later this week, we're going to do another episode
yeah.
because I got to run. Don't forget, dear listener, you can earn free continuing professional education credit for listening to this episode and all episodes of the Accounting Podcast. Just go to earmark.app, create your free account, and earn 1 CPE for free per week. If you start now, you could get your whole CPE requirement done for free before the end of the year. But you could also support us for $150 a year, get unlimited access to Earmark courses. We really appreciate our subscribers. Thank you to everyone listening who has subscribed. Anything else, David, before we go?
Not anything that can't wait till the next episode.
All right. Thanks, everyone who joined us live. Don't forget, you can subscribe to us on YouTube. Go to @theaccountingpodcast on YouTube. Hit that subscribe, notify button. You can join us when we go live and chat with us. Great to see you all, Rafi, David, Boring Accountant, Nightbird, Tina, Madman, Dan, Gator, NYC. Thanks, everyone. Christopher, R5HD, Ahmed. Great to see you, Evan, Natalie, Trevor. See you around here next week. Bye, everyone.